Hello and welcome to Your Trades. You're watching ET Now. This is a show where we'll be summing up all the trading action that we've seen in today's session. Well, not much to talk about because everything has been on the negative side today. Massive profit booking, and that sell-off has intensified on D Street today because remember at one point of the trading day, we were struggling to even hold on to the 23,700 level. And in fact, for the longest time today, we were flat in the second half of the trading session. We've seen a sharp cut coming in on the index, and now we've ended below the 23,500 mark as well. So it's been almost a 250 point cut coming in from the day's highest point when it comes to the Nifty 50, a 0.7% downtick coming in on an intraday basis. Let's pull up the Sensex because a slightly intensified sell-off coming in on that front, and the Sensex was lower by almost a percent in today's trading session, a 730 point drop coming in on an intraday basis. Nifty Bank also has not done all that much. In fact, it's also been one of the biggest losers when it comes to our market moves today because no action from your PSU banks, private banks. None of them have participated or contributed to the day's move in any way. In fact, on the negative side is where the contribution has been from both of them, private and public banks, at the 0.7% cut coming in. PSU banks also lower by 1.2% as we speak. Let's pull up the broader markets because at one point of the trading day, there was some hope of optimism coming in from the Nifty mid-cap index. That was 4.4% higher in today's trade. That has also simmered down, and in fact, it has inched in more losses than the highest point of the trading session. The kind of gain we had seen today, it was 0.4% higher. It's 0.6% lower, so more than a percent and a half drop coming in from the day's highest point for the Nifty mid-cap. Similar story for the small-cap index. That's always been in the red in today's trading session, but intensified sell-off coming over there as well, and a 1% cut is where the small-cap index has shut shop for the day. Let's also talk about some sectoral gainers and losers in today's trading session. And at one point of the day, autos and metals were looking good, but Nifty Auto has ended with a very mild positive bias. It's as flat as it could be. Other than that, all your indices are in the red, barring Nifty Auto. That also on a very technical tinge of green coming in. Nifty Media, your biggest loser in today's trade, a 2.5% cut coming in on that index, followed by Realty, PSU Bank, IT, Energy, Pharma, Metal and FMCG. That's the pecking order of the most to least losers in today's trading session. But let's understand some other news that made headlines in the day today. Marico was a stock that was gaining on the back of a bullish note coming in by Motilal Oswal. So that was a stock that did well in today's trading session. You also had Siemens that was in focus on the back of the separation of its energy business coming in, that demerger. Siemens was a stock that did well. HAL popped up in the middle of the trading session somewhere around the midday mark on the back of that delivery that it has received from GE of one of the 99 aerospace engines that GE has to deliver to HAL. That has finally happened, and we also understand from sources that India is mulling duty cut on US bourbon whiskey. So that is also a very important news flow amid all the trade war action that we're seeing in the market. But to understand about today's market moves, to make sense of them and to understand where we are headed into expiry tomorrow, let's bring on board Amar Singh, Senior Vice President of Research at Angel One. And Amar, thanks so much for joining us on the show. Always great speaking to you. And that's exactly what my question to you is, right? Because we have expiry tomorrow. We also have the Nifty semi-annual rejig happening tomorrow, where stocks are entering, stocks are leaving Nifty. You have inflows, outflows to the tune of millions that you are going to see tomorrow. Also, last expiry of the month as well as the financial year 25. Lots is expected to happen tomorrow, and after the kind of sell-off that we've seen today in the market, or some amount of profit booking, tell us what we can expect from tomorrow's trading session and just how much of volatility should we brace ourselves for in tomorrow's trade?
Very good morning, very good afternoon, and thank you for having me on the show. We were definitely expecting that there would be some sort of profit booking and selling happening at higher levels, and that's what we've been witnessing since yesterday. Because if you look at from the highs, Nifty is down by almost 400 points. I'm talking about yesterday's high, roughly. So that tells me that the sharp rally which Nifty has witnessed of almost more than 1,800 points, that's bound to witness. And also, as you rightly said, we've got the monthly expiry, and also it's got the financial year closure coming. So I think profit booking is definitely there. And also what we are seeing in the US markets, because global markets also matter, and US markets have also been more or less, I would say, in a range bound manner they've been trading. As far as our markets are concerned, I would say I would say segments are witnessing some sort of correction, because if you look at the market breadth today, that has been extremely in favor of the bears. It's I would say 1:3 sort of ratio in advances versus declines. So that tells me that higher levels will be sold into. And if I look at the short-term perspective, short-term what we are seeing is that the trend is very strong for the indices. But higher levels, I would say 23,800, 24,000, 24,000 level, that's going to be a very important zone of resistance. So the market could inch higher towards that level. I'm not only talking about for tomorrow, but maybe for next few days. But there's going to be heavy selling at those levels. On the downside, yes, Nifty's got some very strong support now at around the 23,300, 400 zone. That should act as an immediate short-term support. So any pullback towards those levels tomorrow could be a short-term buying opportunity for an upside move of 200 to 300 points, but higher levels will be sold into. And that's what we are witnessing not only in Nifty, but also in the major heavyweights, which have a significant weightage in Nifty.
So thanks for that view coming in, and yeah, of course, lots to watch out for tomorrow in terms of the Nifty semi-annual rejig also that's going to be happening. But Amar, on that note, share with our viewers what is your stock-specific recommendation right now, and amid this kind of volatile market, where are you still seeing some safety net, and what would you recommend to our viewers right now?
So if we look at the sectors, I would say cement definitely is positive, because we've seen some very strong moves coming in the cement pack, and Grasim is one of the stock which, despite the market correction today, also is closed in the green. And if I look at it on the intermediate term trend, some of the technical indicators have turned positive. So this is one stock one can look at from a short term to medium term perspective, buying at the current levels with a target of 26.45 on the upside and a stop loss of 25.30. And the second stock to look at is from the FMCG space, and that is, you've already talked about it, Marico. So if I look at Marico, what we are seeing here is that the stock had corrected from almost 730 levels to sub 600, and then it has bounced back towards 640 odd levels. Today, the stock is up almost to 2.5%. Last few days, it was trading in a zone unable to breach the 625, 630 level. So sustaining over that level is something which is going to be very important for Marico. So this is one stock one can look at the current levels with an upside target of 664 and a stop loss of 624.
Take coming in on stock-specific action as well as what to expect for the expiry tomorrow and for the remainder of the week. But on that note, Amar, we'll let you go. Thanks so much for joining us and sharing your outlook on the market with our viewers. But well, let's shift focus and understand what's the way forward for banks and consumption. Let's go across and listen into the word coming in from Rajesh Bhatia, the CIO at ITI-MF, about the ideal strategy for banks and consumption amid a market like this.
Banks has been a consensus for probably 3 years or 4 years because their valuations have been a lot more comfortable, but not that necessarily that all banks have delivered quite well. But I would say that there are some banks which are facing, let us say, challenges in terms of acquisition, etc. They have taken time to digest that acquisition. Now, if you actually form a thesis, I would say that the valuations have come down dramatically from where they were. They were considered the stars as far as valuations are concerned, then they've moderated to a fairly low level of valuation. Given their ROE, that valuation seems to be justified. And they seem to be at the bottom of the economic performance as well. So you're closer to the bottom of valuations, closer to the bottom of economic performance. So as you move forward, as they digest that acquisition, my sense is that both will correct as you move forward. There's no point in, doing any bottom up on consumption staples or something like that. So there are areas and pockets of visibility and predictability. That's where you ought to be going. So my sense is it's going to be a lot more stock-specific market. It's not going to be a trending market.
Okay, so that's the take coming in on how viewers must play or investors must play the entire consumption and banking basket. But let's shift focus to some technical news flow, and let's talk about how the derivative space and the F&O space are shaped up in today's trading session. Let's understand for the March expiry, well, which is tomorrow, so lots of volatility, heightened volatility is what we've seen in today's trading session. Let's understand the key levels that we were spotting in today's trade. Now for the March expiry, for the index futures trend, we're seeing a short short build-up coming in on Nifty as well as Nifty Bank. So there's nothing surprising about that, given the way that our markets have consolidated yesterday, and there's been a further intensified sell-off in today's trading session. So short build-up is what the initiation looks like on Nifty and Nifty Bank as well. Let's pull up the India VIX. Despite the kind of moves that we've seen in the market today, India VIX is lower by 1.2%. So at least that's looking healthy for the market right now, because at least volatility is not very, very high compared to what we have seen in earlier levels. Remember, there have been times where we've reached the 15, the 17 mark. So 13.5 looking very, very healthy for our market right now, given the way things are going. Let's talk about the active calls for the 27th March expiry. We're seeing some call writing at 23,700 and 23,800. And now, viewers, unfortunately, we do have a resistance level in sight. Remember, yesterday we had an eye on the support but no eye on resistance. That was indicating some positivity. But today we have an upside ceiling. 23,700 is where Nifty is facing some resistance. It's been around that mark. In fact, today we have even slipped below the 23,500 mark. So 23,700 is going to be the key hurdle, the next hurdle to cross for when it comes to the Nifty. On the active put side for the 27th March expiry, we're seeing some put buying at 23,500 and 23,400, and given the way that we have consolidated over the last two trading sessions, currently as of now there is no eye on the bottom for the market. But well, yes, resistance level is at 23,700 as we speak. But well, yes, it's again that time of the month where all eyes are set on the March Nifty rejig. It's that time of the year. Zomato and Jio Financial are poised for inclusion in the Nifty 50. Let's go across to Sharad and understand the kind of inflows the street is looking at. What's the impact going to be on both of these stocks, as well as the two stocks that both of these counters are going to be replacing in the Nifty 50 index? Sharad, take it away.
Well, important day tomorrow where Nifty indices, the rejig would be there, and of course there is expiry as well. Now, if you look at the inclusions, we are having Zomato, that's almost $602 million of inflow coming in, replacing BPCL, where $225 million of outflow is expected. And Jio Financial is expected that this will be coming in Nifty 50 with a $308 million of inflow expected, while displacing Britannia, where more than $200 million of outflow is expected. Now, Nifty Bank also, if you look at it, Federal Bank is expected to receive strong inflows of northwards of $17 million, followed by outflow of Kotak Bank as well to the northwards of $60 million. CPSE index, also Power Grid, is expected to see strong inflows, while NTPC on the other hand is expected to show strong outflows. Now, let's look at how the valuations and the EPS pans out when it comes to the Nifty. The overall EPS numbers after the rejig, it's coming down at an average level, while the valuations of Nifty, if you look at it, that numbers are going to go up because of Jio Financial as well as Zomato, both of these stocks coming in, and that is where we are seeing the valuations would go up, especially because they are having lesser profits in their numbers as well. So Nifty would turn a bit expensive after this rejig.
Okay, well, Sharad, thanks so much for taking us through that explanation on what we can expect when it comes to the Nifty 50 semi-annual rejig tomorrow. Four stocks are going to be in focus particularly. It's going to be Zomato, that's replacing BPCL, and Jio Financial, that's replacing Britannia. So watch out for how all four of these stocks react in today's trade. But other than these stocks to watch out for, let's take it across to my colleague Ravinder, who's standing by with a list of all the stocks that were abuzz and in the spotlight in today's trade, just for a quick roundup on that. Ravinder, thanks so much for joining us. Take it away.
Well, yes, Siemens is in focus, where company has received NCLT approval for scheme of arrangement between Siemens and Siemens India Energy, and energy business will be demerged and transferred to Siemens India, Siemens Energy India, and shareholders will receive one share of Siemens Energy for one share of Siemens Limited. Moving to next, Bharat Dynamic were also in focus, where company has signed a contract worth of rupees 4,362 crore with Ministry of Defence for supply of armaments to Indian Armed Force. Apart from this, Hindustan Aeronautics Limited were also in focus, where as per reports, GE Aerospace delivers first of 99 F404 and IN-20 for the Tejas light compact aircraft Mk1A fight jet, and delivery has given to Hindustan Aeronautics Limited. GE Aerospace has a 40-year-old relation with Hindustan Aeronautics. Apart from this, NCC is also in focus on back of order win, where company has bagged two orders worth of rupees 10,805 crore from BSNL. Apart from this, Marico were also in focus on back of brokerage note, where Motilal has come out with their note on Marico, and they have maintained their buy rating with target price of rupees 775. They are expecting a 11% revenue growth and 13% EBITDA CAGR from FY25 to 27. and they say that the international business is showing a steady growth and high input cost might affect margin in the short term, but the long term outlook remains positive for Marico.
Okay, Ravinder, thanks so much for joining us with a list of everything that was in focus today. But let's shift focus and talk about an 18 exclusive. Amid ongoing trade negotiations with the US, India is likely to further lower duties on American bourbon whiskey. ET now learns that India may relax its stance by reducing import duties to 50%, down from the current 100%. Sameer Dixit, who's tracking the story closely, is joining us with exclusive details. Sameer, take it away.
Well, amid the ongoing trade negotiations with the US, Indian government is likely to provide more relaxations by lowering the duties imposed on the import of American whiskey, or specifically the bourbon whiskey. The Indian Commerce Department is actively considering to lower the duty to further 50%, to impose a duty of just 50% on the import of American whiskey or the bourbon whiskey. Currently, if you see, the Indian government recently, almost a month back, reduced the duties from earlier 150% to 200%, which included a 50% basic custom duty and an additional 50% agriculture cess. But now government is likely to take this relaxation to the extent of 50%. A further reduction to the tune of 50% is what the Indian Commerce Department is actively looking at. However, the Commerce Department is not favoring to reduce the duty to 0% or bringing it down to nil, because they are looking to safeguard the domestic players as well. So that's what the Indian Commerce Department is currently looking at, to provide relaxation on the import of American whiskey by lowering the duties or the import tax, but not to the tune of 0%. And if you see the larger picture for the financial year 23-24, the import of American bourbon whiskey or the American whiskey was somewhere to the tune of $1 million, and government understands that this will grow manifold when the duty is reduced, and this will help to further strengthen the trade negotiations with American counterparts.
Okay, well, thanks Sameer for joining us with all of those details. But that brings us to an end of this wrap of the market today on this edition of Your Trades. From me, Snehisha, and the team that put this show together, thanks so much for tuning in.